What's good, everybody? Spektrades back here. In this video, we're going over how to find high probability point of interest and high probability zones. First and foremost, my name is Wendell, but I go by the alias Spektrades. I am a full-time day trader and have been in the financial markets for half a decade. I specialize in ICT smart money concepts. My goal is to simplify smart money concepts and help you shorten your path to success. If you want to stay up to date with me, make sure to check out my Instagram at Spektrades. I have been a mentor to over 1,000+ students, and if you want to join me for daily trading plus private lessons, you can just click the link in my bio, find all the links. You know, my Instagram, I post reels and I just post daily markups to keep you updated and always keep you refreshed. Without further ado, let's get it. Before we hop on the chart, first we have to go over our criteria in our two models. So our first criteria is that we zoom out, right? Observe the higher time frames. It frames the whole picture for the lower time frames. The higher time frame point of interest or more stronger than the lower time frames. An example is a lower time frame point of interest might be a type of inducement for a higher time point of interest. As you guys can see here, if we zoom out right here on the lower time frames, as you guys can see, price has created a range. Price has given a second break of structure right here. This is what we call a second break of structure after price has given us our first break of structure. So now there possibly may be a order block hiding right here on the lower time frames. But if you zoom out on the higher time frames, so say this is a 1 hour zone, but on the 15 minutes or the 5 minutes, there's an order block laying down right here. This is a 5-minute order block. So the 5-minute order block, right, that a lot of people are looking to target, right, when you zoom out on the 1 hour, you see that it's used as a inducement. Price is gonna pull to that order block. Willing sellers are hiding their stop losses above this inducement high. So price will seek those stop losses and tap into our higher time frame point of interest that is more prominent. So that's for number one. We have to zoom out. We have to observe the higher time frames. We have to do a top-down analysis. We have to go from the daily, from the 4 hour, from the 1 hour, and the 30 minutes to develop a higher time frame bias. And then we scale down on the lower time frames. That's when we can execute those zones. So the first key to find high probability point of interest in zones is that we have to zoom out. If we want to find good zones, the good zones will lie on the higher time frame. Our main scalpers, we want to stay on the 1 hour, the 30 minutes, and the 15 minutes to look for high probability zones and then execute those trades on the 5 minutes, the 3 minutes, and the 1 minute. And for day traders / swing zones, right, for the time frames for those is the weekly, the daily, and the 4 hour. And then you want to execute those trades on the 1 hour, the 30 minutes, and the 15 minutes. So now for number two, we need a liquidity sweep and a market structure shift has to be present. So as you guys can see here, we need price to take liquidity from an old high, right? We need price to run on old high or old lows while inside a higher time frame key level. So we need price to run old highs and give us a break of structure of the old low that ran on the old high. That's for number two of our criterias. That has to be present for this zone right here to be high probable. And then for number three, we will look for a inducement or a pool of liquidity to be present. So after our market structure shift, price will come back, give us a short-term high, and on the lower time frames form lower time frame point of interest that's gonna pull price toward our higher time frame zone. And then we're gonna scale down on the lower time frame and execute inside of our higher time frame zone to go to the downside. And it's the same thing for this model right here. First, we're looking for a liquidity sweep and then a break of structure of the low that did the liquidity sweep. And then we're looking for a pool of liquidity to be built inside of this range. So this is the range high, and then this is the range low. So now we're looking for a pool of liquidity to be built inside of the range, and then price is gonna clear that pool of liquidity, tap inside of our high probability zone to push price lower. And it's the same thing for a buy model also. The same thing, a liquidity sweep of an old low, break of an old high, an inducement to be created, price seek that inducement because willing buyers are hiding their stop losses below it, tap into a high probability point of interest on the higher time frames, and then we scale down on the lower time frames for us to execute. And then for number four, we're looking for a order block or a fair value gap entry to be present. So after price give us our market structure shift and our inducement is present, and then inside of our range, we'll be looking for either a order block or a fair value gap that is close to the inducement, right? That's what we're looking for, a order block or a fair value gap that is close to the inducement. So if it's way too high up here, price is not gonna push all the way up here to seek that. The point of interest has to be close to the inducement. Perfect. So that's for number 4, where we need to see a order block or a fair value gap entry that is close to the inducement. And then for number 5 is execute and use proper risk perimeters and target old highs or old lows. So when price tap into our high probability point of interest, we will then scale down to any of our execution time based on the type of trader that we are, right? As you can see down here. And then we're gonna scale down on the lower time frames, and then we're just gonna use our proper risk perimeters, and we're just gonna be targeting old lows or old highs in a buy format. And a key before we hop on the charts is to wait for price to come in premium to sell, and then wait for price to come in discount to buy. As you guys can see here, we have to wait for price to cross the 50% of this range right here for us to sell. If price was still playing around in discount, this is not a high probable zone. Price has to cross the 50% line for us to sell. And then for a buy, price has to cross the 50% line and then tap into a discount zones, right, for us to buy. And then for price to sell, price has to tap into a premium zone for us to sell. Now let's hop on the charts and see exactly how we can go by finding high probability point of interest. As you can see here on the 15-minute time frames, we see a clean 15-minute point of interest that we're going to be scaling down on the lower time frames for us to execute. But first and foremost, did this 15-minute point of interest align with our criteria? First thing we're looking for is a run on old lows. As you can see, price took liquidity from these old lows. And what do we look for in our order block? Has to be present. We have to see we have our inducement low, and we have our bearish engulfing order block. Clean. So now this is our 15-minute zone. Now on the lower time frames, we're gonna scale down on the 5 minutes and the 3 minutes and on the 1 minute to see how we can execute this zone. And now we're on the 1 minute. As you guys can see, price came in and tapped into our zone cleanly. As you can see, price came and cleared this old high right. This gives us a break of structure inside of our zone. But now we know this is our strong low. First entry maybe at this order block right here. This could be your first entry. If you are scaling down on the lower time, you just place your entry right at the open, and where your stop loss is right at the strong low, because we know that this is a strong low. Price will not come back down and purge through it. So make sure you guys watch my strong low and weak high video also. Let's just use this right here as our target. And now on the 1 minute, what more entries can we find when we scale down inside of this 15-minute point of interest? And then as we can see, price came and pushed up and gave us another break of structure. Now with every break of structure that we get, price is not going to respect all the bullish PD arrays. So now we're just going to draw out this new order block. This could be our second entry. Place our stop loss at the exact same strong low. What do we target? Same old high right here. And then last but not least, what other entries do we see? Just like I was stating, every break of structure, price has created a new range. Now we're just going to grab our Fibonacci. We're looking to take any point of interest inside of our discount. As you guys can see, we have to wait for price to cross discount first before we buy. As you guys can see, price crossed the 50% line, and what do we see? Price will use this old high right here that got purged through and now has become a support stop loss right at the old low, where you're targeting the same old high right here. Clean. And now you can see how with just a strong high probable 15-minute point of interest, how I can scale 3 trades in on the lower time frames. Now let's find us some more. That last example was for scalpers, and now we're going to look at an example for swing traders. Right here we have our daily zone. So as you can see, price took liquidity from these old highs right here. This is the first thing that we look for, liquidity sweep of old highs, and then we see that price, give us a market structure shift. And just like I was saying, now we are in this range right here. For us to sell, we have to wait for price to cross into premium. So as you guys can see, we wait for price to cross the 50%, and on the daily time frames, what we see this clean daily order block, and we have a inducement right underneath it. Just like we stated in the fair value gap video, if you guys haven't watched that already, the fair value gaps are the magnets of the markets. Price will attract to it, as you guys can see. And then on the lower time frames, now let's scale down to 15 minutes and see exactly how we're gonna execute. So as you guys can see, price came inside of our point of interest. The first thing we have to see is for price to run on an old high, and then price give us a break of structure. You guys can see this is showing our second model. This is building a pool of liquidity right underneath our point of interest. Boom. And now on the 15 minutes, you just place your stop loss right at the old high, because now this has become a strong high. Price guys took liquidity from these old highs, give us a breakup structure where we're looking to target old lows. And you guys can see, even though price didn't hit it yet, price still gave us a breakup structure, a second breakup structure right here. Just like I stated with the last example, with all the breakup structures, price is now just gonna respect all the higher time frames interests. So now we can see here, this order block respected. This could be your second 15-minute day trade entry. Your stop loss goes at the previous old high before this breakup structure, where you target the same old lows. And as price is moving down, price is just gonna show you more entries on the 15 minutes based on this daily order block right here. As you guys can see, this daily order block was strong. This higher time frame zone was strong, and it was able to help us find lower time frame day trade entries to help us go to the downside. And just like for the last example, the 15-minute higher time frame zone was strong, and when we scale down to the 1 minute, those 1 minute trades held perfectly because we had a strong 15-minute zone. So this is gonna be it for this video. I hope you guys enjoy this video. I hope you guys go on your charts and backtest this and see this for yourself. If you guys are interested in joining my Patreon, it's patreon.com/SpecTradersHub, or the first link in the description. And right here we have the Spektrades Hub, where you can access the live trading with me every single morning on the Zoom calls. And right here we have our main scalping mastery strategy course right here that we have also. So this is it. I hope you have a great rest of your day. Spektrades out. I hope you guys like and subscribe and comment down below what you think. This is it. Spektrades out.